Market isn't misbehaving. It's behaving exactly as it's supposed to. In order to see long-term reward, we got to put up with some short-term pain. Hey everyone, welcome back. Today I want to talk about investing because the market is misbehaving again. Or is it? That's particularly the thing that I want to talk about is our expectations of what we should expect when we are investors investing in the stock market. So I just want to tell the story. I'm going to give one example. All right. This is going to be one particular mutual fund, which I'm not recommending, nor is this a prediction of what's going to happen in the future. It's just a story about what actually happened in the past so we can be better prepared for what might happen in the future. So Vanguard Total Stock Market Index Fund. All right, if we invested in that in January 2000, it ends up being a really bad time to be an investor because starting in September of 2000, the market dips hard. This is the dot-com bubble, okay? It drops 44.8%, and you don't get back to the same level as you were in September 2000 until November 2006. You were underwater for 6 years and 3 months. Not fun, okay? But hey, we're in recovery. Then, just 1 year later, starting in November 2007, Great Recession. Even a bigger drop, all right? After November 2007, the market drops over 50% again, all right? And it takes 4 years and 10 months until August 2012 to recover your investment again. So you started in January 2000, went underwater for the dot-com bubble, got back, went underwater for the Great Recession, 2012. Fast forward to today, August 2022. Despite those 11 years, 12 years, we were essentially underwater the whole period, your annualized return has been 6.35%. That's okay, all right? It's not gonna, it is below the long-term average for a stock market investor, but you had two really, really poor events that occurred. And ultimately, at the end of the day, getting a return, 6.35%, is a reward for bearing risk, or at least is a potential reward for bearing risk, which are those two drawdowns. And coincidentally, we're in the third biggest drawdown for this particular fund right now, okay? So the market is actually behaving exactly as it should. And if you want to see the potential reward down the road, we need to be able to bear the short-term risk right now, okay? The key thing and learning lesson here is learning what your appetite for risk is, all right? If you feel uncomfortable with a 3, 4, 5 year period being underwater or a drop like 50%, then it's okay to take less risk in your portfolio, mix in potentially some fixed income so that there is a smaller drawdown period and less time that you're underwater in your investment. No matter what, even though that has less potential upside, your personal returns will be better because you can actually stay in your seat, okay? So the market isn't misbehaving. It's behaving exactly as it's supposed to. In order to see long-term reward, we got to put up with some short-term pain. So stay in your seat, make sure that your asset allocation fits you as an investor and your balance sheet, and play some golf, have some fun. Don't worry about what the market's doing, and we'll talk again soon. So have a good one. See you later. Bye.